In the stock market, there are very few certainties. About the only certainty is that over the long term, overperformance turns into underperformance, and vice versa. So, is there a pattern to this movement? Well, let's take a look. This chart here is from Advisor Perspectives and shows the S&P Composite Index regression to trend. Simply put, regression to trend is what goes up must come down. Looking at the chart, you can see the red regression trend line drawn through the data, and that regression slope represents an annualized growth rate of 1.9%. Now, the peak of the market in 2000 was at 129%. And that overshoot was substantially above any prior high, even in 1929, where the level was 79%. And now, the level at the beginning of September 2021 is 180% above trend. If the current S&P 500 was sitting squarely on the regression line, it would be about 1587, wherein the S&P 500 closed today at 3913. Time to be cautious, I would suggest. So now let's take a look at the long-term chart on the S&P 500. And we're now looking at the 20-year monthly chart on the SPDR's S&P 500. The symbol is SPY, and the close was 451.46. And looking at the chart from that beginning here in early 2009 all the way through the current time frame, it doesn't look too ominous, with the exception perhaps maybe the separation between the 20 EMA there and then the current level. And that's the largest gap that we have on this chart going back 20 years. Into the oscillators, the volume's not going to tell us too much, but the MAC does. It shows that we're definitely well elevated at this level here, which is 38.35 on the fast line and 30.832 on the slow line. So again, this is at the highest level it has been over the 20 years. We still have a pretty good separation, and this height above zero means there is plenty of strength. But moving into the histogram, you can see there that there's a bit of a topping process. So this to me is simply a warning sign. It's not saying that the market's going to crash tomorrow. It's just a little bit of a slow down sign, and keep your money in your pocket for now. Stack some cash. Into the price rate of change, this too has a pretty good height at that level there. It's coming on down now, but the fast line hasn't pierced through the slow line, so we can still watch and see how this evolves. Again, just cautionary tales. Into the relative strength index, we see that we're at 85.59, and we haven't been in that upper level for quite some time back here, say late 2017, early 2018, and we had a pretty good tumble following that. So there's always the potential for that. We can see here a couple of times that we were above that 80 level in that overbought territory, above 80, and sooner or later it did lead to a little bit of a tumble here. But this took a couple, let's say a year and a half, maybe longer, before we did have that downdraft. Back here in 2006 and 2007, of course, you know what happened then. That was pretty steep and pretty ugly. It's not to say that this is going to happen now. It's just to say that it's time to be cautious. Same thing here in the stochastics and as well as in the Williams. All of these oscillators, for the most part, are telling us to be cautious. There's no crash ahead, at least right now. But for now, I would say just tread kindly and gently. And for today, that's ChewDog Charts. Thank you.